Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down, or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical, and even seasonality in their favor. I will revisit some trade ideas I shared recently before knowing the results as usual. I'll explain how I am managing those. If you stay with me, I will show some stocks, at least one, getting ready to buy or short, and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time using Q systems. Anyone could. Now, before I start with today's presentation, for which I prepared, I would like to take a note that there is a storm outside. Sometimes my electricity was going off. If that happens, this live session may suddenly switch off. I apologize if that happens for that in advance, and let me hope that it doesn't happen and continue. The market was at a very high price level, and I thought this would be an appropriate theme for this week's session. How do you know how high is too high? And not only know that, how do you make a profit from that? Whatever your trading style, it is useful, probably even essential, to know how high is too high. There are multiple situations against which that question is to be answered or can be answered. Knowing the answer increases your profit and reduces your loss in each of those situations. There are multiple ways that can be answered. I look at some of them. The opposite query and its answer are equally important. How low is too low? You can profit from that answer too. In both these queries, what is required is an answer with a higher likelihood, not a certainty, to profit from it. Not a certainty, but just higher likelihood is enough. Certainty in market analysis does not exist in my trading world. I only work with probabilities. Now coming to that question, and you will see that question can be from multiple angles. This is one example, how to answer that question and how to make profit from that. Let's say you decide to short a stock based on the weekly, daily at a glance chart template. You have already decided, but you did not take the trade. Maybe at market closing time you were not available with your computer. The next day you see the stock is too high in the 5-minute precision entry chart. Then knowing that it is too high in the precision entry chart, you may look to initiate a short at a pivot resistance. In this case, too high may be decided using the Q stretch indicator. This is a way to find out when it is too high, and in this case the too high is on the 5-minute intraday real-time time frame, and you could profit from that by entering the trade at a better fill price, because we are shorting when it is getting overbought using the Q stretch indicator. This is an example of precision entry of a swing trade. The same technique can be used for day trading also. I don't day trade usually. I will show a live example of how I use that for precision entering a swing trade. The intraday chart precision entry using stretch indicator and stretch release indicator, they come together. That is an intraday implementation of the box sideways market swing trade short setup. So the principle that you can apply for box short setup is the same principle I described in the intraday time frame in the previous slide. Box setup uses the same stretch indicator to tell when the market is too high. Stretch and release can be used to decide bullish situations also at the lower edge of a sideways market. So everything that we do with the bullish side, we could do that on the bearish side as well using the reverse indicator. I will show a live example of that later today, how we could use stretch and release to decide bullishness at the lower edge. That is too low a condition and we can turn bullish at that level. Broadly speaking, stretch shows when it is too high or too low in the current legs move, not across legs. So a market may move up, come down, move up again. Each of these moves can be considered as one leg. The down move is also a leg. The stretch is designed to show when it is too high or too low in that current legs move, not across legs. It's not too high across these two legs or three legs. It's just in the current legs move. That is the use of the stretch indicator. That is how I used it in the previous two slides. Now let's come to a trend following case. And this is an example of too high, but you see I'm answering the question when it is too high and what to do with it from multiple angles. Now it's another angle. If you did not take a buy trade on the day the flow setup was confirmed, or maybe the next day near the open, if you were not available at the market close when the flow setup was confirmed, so we buy either on the signal day or the day after signal day near the open. If you did not do either of that, the stock may be too high already for a low risk entry. This is also answering the question when it is too high, how high is too high, but from a different angle. Not from stretch perspective, not from intraday perspective, but it is from a swing trading perspective in a trend following market, and when it is already too high for entering the trade. So if we are not entering on the signal day of the flow setup or day after signal day near the open, then it is too high already to enter the trade if the stock has moved up after the flow entry, and even more so if it has hit the upper boundary. It may be trend following, it may be going up in an uptrend, it might have had a flow setup one day ago or same day one day ago, but if it is already hitting upper boundary, it is already too high. Avoiding such too high stocks will reduce risk and increase profit. So we may give up on that stock if we did not find it in time or we did not enter the trade in time. That is already too high. The upper boundary especially shows when it is too high to buy a trend following stock for swing trading. All my discussions usually revolve around swing trading. Sometimes I talk about longer term investment, position trading or day trading, but most of the concepts I described are for swing trading. So if it is already at upper boundary, then it is already too high to take a trade using flow setup. The delaying after a confirmed setup, this concept, the delaying after a confirmed setup makes a stock too high to buy. Every day delay makes it suboptimal to take the trade, and that concept applies not only to the flow setup but applies to all the queue trade setups. Each day's delay in buying after a confirmed setup means the stock is probably getting too high already to enter. That is called chasing. Chasing a stock, whether one day late, more days late, early chasing or late chasing, does not help. Chasing does not help. If we are buying using queue systems, buy on the signal day. If we are not available near market close, we may buy next day using real-time charts. But if we are using a system, we are using that system or not. So if we are using the system, follow the system, buy on signal day, day after signal day. I will show a live example later today where chasing a stock turned a perfectly profitable swing trade into a risky and possibly a losing trade. It's a trade that you may be having open now. I shared it earlier in the last market recap. I'll take that as a live example to show how chasing did not help, but it became too high as we delayed, if we delayed after the signal day. Now let's take this concept to longer term investment, but I'm looking at multiple things from different angles. For longer term investment entry, and every long term investment entry by definition can be a swing trade entry, but not vice versa. Every swing trade entry cannot be a long term investment entry. The conditions of the stocks may be different for long-term investment and swing trade, but every long-term investment entry can certainly be also taken as a swing trade. And for long-term investment entry, the Q price extreme low level is a too low level. So we don't just look at too high, we also look at too low. So Q price extreme low level is a too low, which in this case is an attractive level to look for a buy entry. And sometimes after price extreme low, we get price extreme low and reversing up. That shows the stock is getting even more ready for buying. So too low and attractive to buy. Q price extreme low, keep tracking, price extreme low and reversing, getting better. And I often scout for buying opportunities based on those, meaning based on price extreme low and price extreme low and reversing. And I will show a live example later today. The price extreme low is a too low attractive price level to find lucrative buy points in, this is key, fundamentally strong stocks. Just because a stock is at price extreme low does not make it a buy candidate in my trading techniques. It has to be fundamentally strong. And often these buy setups at price extreme low tend to be turnaround candidates. Turnaround in terms of stocks fundamental, and sometimes it may also come with industry turnaround. Using the concept of how low is too low and then look for buying at attractive price level. Another concept, if Q jump thrust high is hit, it is too high to buy. No more ifs and buts. If Q jump thrust high is hit, it is too high to buy. It is also, I may add, it is also a too high price level to carry a long position without a trade management plan for a potential reversal. So it's not only that it is too high to continue to buy that stock or instrument. But if we have a long position, when it hits jump thrust high, we, I may use the word must, we must have a plan in place. But must is too strong a word in trading. We may, if we want, I always want that, hesitate to use the word must, but I always do that. If I have a long position and it is hitting jump thrust high, it is too high a price level for me to hold the trade without a management plan in place for potential reversal. Management plan could be selling call, maybe longer duration call, or it could be putting protective stop, profit protecting stop. I almost never buy protective put to protect my long position when it is at jump thrust high. Usually I avoid buying options, usually. So that is about jump thrust high. How high is too high? Answering that from different angle. We could also look at jump thrust low, the opposite side, that will answer the question how low is too low. I often use jump thrust low to look for buying and jump thrust high, look for shorting. I'll show live examples of both later today. How I use jump thrust low to buy, how I use jump thrust high to short. Those were all technical analysis. Technical analysis is not the only angle to read a too high situation or too low situation. Q has several breadth indicators across multiple dimensions for assessing too high and too low. I'm not able to cover everything, of course, in every market recap. Today's theme is too high, too low, but I'm probably not going to cover every aspect of too high, too low assessment. In Q, I'm covering some that I noted down in preparation. Let's look at some other non-technical dimensions. In Q edge, bucket analysis shows it is too high and a pullback is likely when 30 to 40% of stocks are at the uppermost bucket. Another way bucket analysis in Q helps to show too high situation when more than 10% of the stocks jump up in the uppermost bucket in one day. So if one day earlier the percentage of stocks in uppermost bucket, for example, was 5%, next day it becomes 20%, jumps up by more than 10%, 15% in this case, then it is too fast a move, too sudden a move, and that also signifies too high. So Q bucket analysis is different from some other bucket analysis package because it has two ways to show when it is becoming too high, because it not only has today's information, it compares previous days information, and if the move is sudden, it says it is moving too fast, it is not sustainable. That is another way to read too high a market. And this market is appropriate for this topic because both were true last week. I tweeted about it using 16th July's analytics, Q Edge analytics, and the market pullback since then works like a clockwork. And thanks to Mr. Jeffrey, Dr. Jeffrey, this concept of using bucket analysis I learned from him and I implemented it in real time in Q Edge. It is I may say it is an indispensable part of my trading in knowing what? In knowing too high and too low. Makes money all the time. Every time it goes to too high, it makes me some money. Every time it goes to too low, it makes me some money. In fact, all these angles helps me make money. I'll show you live examples of all of them. Now, Q Finder, a unique product, and it has many ways to indicate too high and too low, and all of them again make me money. Q finder's technical breadth shows it is too high and a pullback is likely when the weekly bearish headwind flashes a warning sign. Weekly bearish headwind. That is more important for the headwind alert. When it comes in a bullish market, so Q bearish headwind in weekly flashes warning in a bullish market, usually the market pulls back after that. Daily headwind breadth signal is also worth noting, though I put more weightage on the weekly based on my observations. If daily headwind alert flashes, that is something that I take note as well. So headwind alert is technical breadth Q finder is one way to know too high. Of course, too low can also be obtained from that opposite color. The same too high reading is also available from the daily. Now daily red candle high warning. These are warnings that flashes on the technical breadth page. So red candle high is another way to know too high. There is a third way to know too high from Q finder, that is when the jump thrust high alert flashes. So jump thrust is another alert that flashes using color change. That is also going to tell us when it is too high. And there is a fourth way to know too high reading from Q finder, that is when in a bullish market most of the buy setups come from price extreme high. So Q has many ways of knowing too high, too low from multiple angles, and Q finder is one product that has 4 different ways of telling when it is getting too high or too low. I profit from all of that. And out of those 4 ways, 3 of those 4 Q finder technical breadth too high alerts were true last week, and I tweeted about it. Using 17th July's analytics, the market has pulled back since then. More ways of knowing too high, too low. Extremely useful. Q market internal health charts show too high situation from many different angles. One is Hindenburg warning followed by confirmation. Bango, designed by Mr. Ian Woodward, may him rest in peace. I implemented that in Q market bread. That shows an irrational exuberance at the top, too high signal. 3-month new high low, again something I started using after observing Dr. Jeffrey's videos, and percentage of stocks above 50 MA that I implemented in Q market bread. These 4 are ways to know when the market is too high or too low. These two, 3-month new high low and percentage of stocks above 50 MA, they work like a clockwork. Every time it becomes too high, any of them, market pulls back. Every time it becomes too low, any one of them, market recovers. And Bango and Hindenburg are alert signals to be cautious, but they don't tell us to take trades immediately in the opposite direction. But the oscillators 3-month new high low and percentage of stocks above 50 MA do tell us to look for trades in the opposite direction immediately. That is not all. On the daily market breadth total view chart, the new high low, new high, new low percentage, that also flashes an alert when it becomes too high. It crosses a threshold. We don't have any number to read from the charts, only lines are already drawn, and if it goes above that line, we know it is too high. So this is another alert that comes from Q market breadth chart daily interval. And two alerts come from weekly interval, weekly divergence in advanced decline and weekly divergence in up down volume. So I am specifically noting when it is weekly, when it is daily, both for Q finder and also for market breadth. Some are more appropriate for weekly interval, some for daily interval. Now this market internal health check to high to low readings can be read firstly from total view, and then we may drill down into Nasdaq NYSE composites and further into the major indexes. We have this analytics from multiple levels. And several of those market breadth alerts came in Q market breadth recently. I pointed to them in live market recaps. In last market recap also tweeted about them, and we'll of course review some of those charts later today. That's not all. Q Vital's fundamental analysis also helps with knowing a too high or too low situation. If the scorecard shows a stock is undervalued, it is better to avoid shorting it, especially true if the stock is already at a low price level. Stocks tend to be undervalued at a low price level, but not always. If it is undervalued and it has already come to a lower price level, even more so, it's better to avoid shorting. The opposite is not true. If the stock is overvalued, it can still be bought. Undervalued stock, I may avoid shorting, especially at lower price, but overvalued stock, I can still buy provided it has high earnings growth, and I may add, not in the slide, it has high earnings growth or increasing earnings growth, increasing or already high. Both of them allows me to buy a stock even if it is overvalued. So these two cases are not mirror image of each other. And whether it is undervalued or overvalued, or whether it has high or increasing earnings growth, Q Vital shows all of that in real time. I use that also in my trading decisions and I profit from that. Stocks that are undervalued and have one or more of the following may be even more lucrative buy candidates. One or more of what? Fund accumulation, insider buying, and short squeeze potential. Q Vital shows all of them in real time for any stock in the USA as well as global markets, and I will show again a live example of such a stock, how I use these characteristics to buy a stock and tell about it publicly. Knowing such too high and too low situation help tremendously in timing entry and protecting profit. So if it is too low, I can time my buy with that. If it is too high, I time my short. And protecting profit how? If it is too high, I have a long position, I tighten stop, or I may hedge with call selling, making it covered call. By doing that, by observing too high, too low situations, it may be uptrending, but it's too high. It may be still downtrending by too low. By observing that, you are often a little ahead of others. Yet, though you are ahead, I am ahead with very high degree of accuracy, and that little bit being ahead of others adds to our profit. In today's session, I will show how I used all these concepts in live trade ideas that I recently shared, all before knowing the results, in market recap YouTube videos or on Twitter. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks in USA and India markets using only one trading system, Q, that I developed. You may contact me using my email IDs info@superiorprofit.co and trading profitably gmail.com. I regularly share live market and stock ideas, some of which I will look at today, review today, on my website superiorprofit.co, X handle Superior Profit, YouTube channel Trading Profitably. All of these are open to the public. I use Q systems, runs on Metastock and TradeStation, multiple components. I'll use several of them today. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk, given only you are solely responsible for the outcome of your trades. Options trading can be risky, does not have to be, but can be certainly. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Now let's come to today's topic. By the way, on my website I have put one of the pictures I have taken. This is one of my hobbies. I am not a great photographer by any means, learning it. If you click on that photo, it will take you to another page where I have put together different categories of images of my life in Thailand. I will not try to load that page now. Okay. Now let me refer to my notes while I continue with today's session with live systems. Let's start with dollar index. Why not? Following up on my last week's market recap. Last week, dollar index was still coming down from trendline resistance. It had watermark support, and at that time it had a trendline support also. The trendline support got broken. What I mentioned in the last market recap was that it will be very difficult for dollar index to sharply break through all the support lines, and that indeed happened. I also mentioned that not necessarily it will move straight back up to the trend line resistance. It can happen, but at minimum I was expecting it to stabilize at least at this level because there were too many supports. And this is an example following today's topic, how low was too low. When we had a swing high in an instrument that is moving sideways and price falls to the swing low opposite edge of the sideways market, we know it is already too low. And that's what I used in last market recap to anticipate that it is getting too low, it will stop there. And after that, the bull release also came. So stretch, then release, release. That is a way to know how low is too low. Live example in an instrument that is moving sideways. This is the principle of taking a box trade. It stopped at the support, and as I mentioned, as we all know, if it holds and if it starts to go up little bit, that will put additional pressure on the market. If it stays there, it will be neutral to the market. If it can again go down, it will be bullish for the market. If it goes up, it will be bearish for the market. But that is only one influence. I keep an eye on dollar index, but that does not guarantee market will move opposite to dollar index, but it is something that influences the market. Influences it enough that I keep an eye on it. Dollar index stabilized on Thursday, Friday. It went up from the open. Both Thursday and Friday after the open, it went up with quite bullish shape candles, and that would put pressure on many stocks, including mega caps. Let's look at the mega caps. What did I say in the last market recap? There was a trend line support here at that time, And I mentioned that if that trend line support was broken, which indeed got broken this week, it would put pressure on the market, especially QQQ and SPY, but on the market overall also, but especially QQQ and SPY because they are heavily influenced by mega cap stocks. They are market cap weighted and mega caps are part of them. Now looking back, we see that almost miraculously the bearish headwind caught the very top. And as you know, I did short some mega caps, at least one I publicly announced. I think only one I publicly announced. I might have shorted others also and made a profit. But I will only discuss the one that I publicly announced beforehand. But before that, let me come back to the chart once more. It is already some distance away from swing high. It is already at yellow direction line. So one thing is clear to me that it is too low to short now. Again, coming back to today's concept, how high is too high, how low is too low. For swing trading, mega cap custom index is too low to short. I shorted earlier one of the mega caps at least, but now it is too low to short. In fact, if it goes up from the yellow direction line, it will give a pullback long setup. A stock is in an uptrend, pulls back to support, goes up with momentum. Hopefully there will be some momentum flow or something else. That will be a pullback long setup. That will in fact be a time to buy. That will be a possible time to buy. I am keeping an eye on that. I noted one scenario where I will be ready to buy. And if you notice my trading, I am always, not always, often I am a little bit ahead of others by anticipating a trade. So I am observing this chart and I am looking at many other things that I will share today. I am thinking that, okay, it has already dropped. Everybody is talking about being bearish. I already booked profit in some short trades. When all others are turning bearish, maybe it's time for me to start to look to buy, which I did on Friday. So I'll come back to that. But this is one thing I am looking at and I am anticipating things. But I am not buying mega cap custom index. I am buying something else. I'll come to that. While in the topic of the mega caps, I would like to look back because the more we look back, the more we see the power of the analysis that I am carrying out, that probably you are also carrying out. I'd like to look at Q Finder, and I have put the mega cap stocks here in Q Finder weekly interval with the performance layout. So it shows me the weekly performance. Which of the mega caps is the worst performer? Netflix is down for 8 weeks now. Amazing, isn't it? Mega caps were super strong. Some people were thinking it will keep on being strong, strong, strong forever probably. They were buying. Some people were buying. Media was bullish. But now you see Netflix is now actually down for 8 weeks. Not 1 week, not 2 weeks. All the 8 weeks are red. That is the worst performer. And which one did I share publicly before knowing the results that I shorted among mega caps? None other than the same mega cap. I could very accurately time the short trade on Netflix because I could read how high was too high for Netflix. Perfect example using live trade that I shared before knowing the results. Now, if we look at the price performance of the market ETFs, I have now put the market ETFs here, again weekly performance. Which one is the worst performer? QQQ. Amazing, isn't it? The only market ETF that I publicly mentioned I took a short trade at the very high was QQQ. And now you see for 5 weeks, 1, 2, 3, 4, 5. QQQ is down for all the 5 weeks in a row. And that is the one I shorted. How could I do that? Because I could very accurately read using the same Q signals that you see that I'm explaining today, that you have probably how high is too high. I could answer that question unambiguously. I took a defined risk trade in both of them and I made a profit. How to know how high is too high, and equally useful, how to profit from that. Let's look at these market ETFs, what they are telling now. QQQ. Amazingly now, once again, the bearish headwind caught the very top. I shorted it along the way and I booked profit also. I had a short call vertical in it. Netflix also I traded using short call vertical. I made a nice profit. Now what is happening? It is far away from swing high, approaching yellow direction line, broke this trend line support, but it is approaching yellow direction line. It is approaching multiple direction lines in weekly, but more importantly, there is a trend line support in weekly, but some distance away. This trend line is probably at this daily trend line level. It is further down, but I am not thinking about price going sharply to that next trend line support. I'm thinking that it may stop at the yellow direction line. What will it give? It will give exactly what the mega caps would give if that happened. Stock in an uptrend, pullback to support, hopefully go up with a momentum that will give me a pullback long setup. I am anticipating that. So it is too low. How low is too low? Now it is too low because it is far from swing high and it is in an uptrend. It is actually near yellow direction line. Is too low to short. How low is too low? Now it is too low for shorting. I am waiting to a buy because it is too low to short. I am looking to buy, but I have not bought it. I'm not going to short it. That is because it is too low to short. SPY very much influenced by mega caps. Interestingly, it is looking stronger than QQQ. Didn't pull back so much. Didn't break this trend line support. Has yellow direction line, another trend line support nearby. Weekly also has trend line support. That clearly shows how much the QQQ is influenced by mega caps. It's the worst performer. I shorted some mega cap. I shorted QQQ when it was too high. SPY also came down, and now looking back, the bearish headwinds were perfect alerts that it was getting too high in another way to buy. But I am not going to short now. If anything, again I am looking for it to come to one of these trend line supports and stop, go up probably. That will give me a buying opportunity. I'm starting to look to buy. Too late to short for me. Daya, by the way, if you went back and I would go back, I want to point out one thing and later on I'll tie with it another analysis. Notice the volume. Very high volume down move for last 3 days in a row, and Wednesday had a huge gap down open. Very high volume, isn't it? And that's what explains the value of internal breadth. This high volume may make people very bearish. Firstly, it is still in an uptrend. We cannot be too bearish in an uptrend unless we are taking a reversal trade at the top like I did. But when it is coming near the support yellow direction line, that is not a time to be bearish. But people are now starting to be bearish because they are seeing high volume and of course some of their stocks are falling a lot. Not mine. My stocks did quite well. I'll share some of the long positions also. They did quite well. But I will tie this high volume up with market breadth later. But I wanted to note this high volume pullback for 3 days in a row, which did not happen for a long time. And for practical swing trading, screen length is enough. Whether you look at full screen chart or half screen chart like this at a glance on the screen length. If it has not happened before, it is something to take note of. And the same thing actually happened in SPY. 3 days in a row high volume pullback, but it's not of course in a downtrend, still in an uptrend. And I wanted to now go to dia. Notice the difference. The pullback is with not that much volume for 3 days, for the last 2 days only, and not that much volume, but only for 2 days. And this is what I wanted to point. It did not. In the last market recap, we were here and I was thinking it might create a false upside breakout. It did not. Instead, it went up and it pulled back. It fell sharply for 2 days in a row, but it stopped above the watermark support. So I mean, it was resistance, watermark resistance, and two things can happen now. If it goes below the watermark resistance, it will complete the false upside breakout. That will be bearish. However, by the time the false upside breakout completes in weekly or daily, price will come down somewhere here. It will be too close to the yellow direction line, and more importantly for me, the trend line support too short. So two things can happen. Either a false downside breakout, false upside breakout can materialize, then it will come too close to support that I look to buy. The other thing that can happen is that false upside breakout does not materialize and this resistance turns into support. There also I am looking to buy. So either way I look at it, whether false upside breakout materializes or not, I am only able to buy when I am looking at low risk entries. I am not able to short. That's one reason from Friday I am starting to buy again. IWM. High volume pullback for 3 days, but here also did not complete the false upside breakout that I was thinking might happen. And if it happened, it would be bearish. I would be ready to take a bearish trade if that happened last week here, but it didn't happen. It went up. So now two things can happen. It can create the false upside breakout. By that time, it will come too close to the yellow direction line. So I'm not able to short. I would rather look to buy with a pullback long setup. Or it may not create the false upside breakout, but this resistance now may turn support and go up. In either case, I am only able to look to buy as far as low risk entries are concerned. So I am anticipating some of these to take place. If they really take place, supports that they are nearby in all the market ETFs, I'll start to buy more and more. That is what the market ETFs are telling. Now, IWM is a live example and I tweeted about it. I'll explain multiple aspects of how high is too high using IWM. IWM hit jump thrust high on Wednesday. If I was adventurous and I could trade with short call vertical. I did actually take the short call vertical on Wednesday itself in anticipation of a pullback because QQQ was coming down, SPY is coming down, and IWM was at jump thrust high. It had too sudden up move and too much up move that made jump thrust high. I was expecting a pullback. I took a defined risk trade, short call vertical. I closed that already with a profit. But if I did not take it on Wednesday, how high was too high? Wednesday. Jump thrust told that it was already too high. So Thursday, what could be done? And let me move to intraday pivot chart. Okay, change to pivot chart. Okay, change to pivot chart, change to 5-minute interval for the morning session. I am mixing the concepts of how high is too high from jump thrust high in daily, and then I will use stretch release in 5 minutes. Here we have align. So Wednesday jump thrust was telling it was too high, look for shorting. Thursday price initially went up, this is Thursday, then it came down with a bearish flow, and if you notice here, this was the stretch release. Stretch release came on this candle. In this case, because the stretch release came on a green candle, the release signal like this red cross did not appear on the candle itself, because the stretch release happened on a green candle, but it did show up on the band indicator. Because the candle was green, I don't like to short on a green candle. I would wait for it to close below the pivot resistance. The concept of box short setup, but applied in an intraday time frame, here 5-minute chart in the morning session, it requires a stretch release and it requires price to close below a pivot resistance, and we have high volume already. And in this case, I am ready to short using daily weekly because of jump thrust high. I am now looking for a precision entry. The first 5-minute bar that closed below some pivot resistance is here. So this should be my short entry using short call vertical. If I didn't feel adventurous and take the trade one day earlier itself, and then as price went on falling, it would come out with a profit. So you could use the precision entry concepts to fine tune it. That would be the, I would say that would be the way to trade if you are using Q systems recently, no, not for too long, but in this case, I looked not only at if I looked at IWM only, using the precision entry chart in the way I explained would be the only way to trade. But I was not looking at IWM only. I was looking at QQQ, I was looking at market breadth, everything. And that enabled me to short IWM one day earlier. But again, I should repeat, if I am looking at only IWM chart, I would not. There is absolutely no way to short IWM on Wednesday itself. Not even with short call vertical, but I did it because I was looking at many other things. If only this instrument, again, the only way one could short with some logic would be to short using this stretch release and closing below pivot resistance using 5-minute interval. That would also make profit. I also came out with a profit. So that was an example of how high was too high using jump thrust, and again on intraday time frame using stretch and then release, and I profited from that. Now I showed the high volume pullback in the market ETFs, and I told I would like to contrast that with what we see in market breadth. So let's see if I can open market breadth. Sometimes Metastock gives me error. I saved the snapshots already for that contingency. It has opened. First thing that I would like to point to is that there is no distribution count at all. It has pulled back for 3 days. What has pulled back? The market breadth total view, the broadest of the market views that are possible. Under the hood, there is no heavy selling, no panic selling across the board. Some sellings in some pockets, but not panic selling, not heavy selling across the board, no distribution count. That is what is very valuable. That does not make me bearish at all. And how high was too high? Live example. Works like a clockwork, thanks to Mr. Dr. Jeffrey Scott, from whom I adopted this 3-month new high low. It was here at the upper threshold 1 week ago. I was expecting a pullback. Works like a clockwork, pullback. Interestingly, it came to the midpoint. If a stock is in an uptrend, it tends to stay between mid Bollinger Band and upper Bollinger Band, or mid boundary line and upper boundary line in Q systems. In a breadth chart, in a strong market, we would think it would stop at the mid level, and it has stopped. The chart itself is not downtrending at all, isn't it? Let's look at it using at a glance, if it allows me to open that. Or did I make a snapshot of that? Let me see if I made a slide of that already. That will save some time. This is USA total view, daily entry chart. Same custom index total view, but now I'm using the daily entry chart. Notice that this also showed jump thrust high. How high is too high? When jump thrust high, both are green. When did it happen? Wednesday. When did I short IWM? Being adventurous, Wednesday near the close. Because I was not looking at IWM only. Even USA market breadth total view flashed jump thrust high on Wednesday. I shorted IWM because I was looking at other things also. This was one of the things I was looking at. How high was too high? Even total view was at jump thrust high and at price extreme high, and I used that overbought condition to short even IWM, and I made a profit from that. But now if you look, it is breaking one support, but there is another support very close by. Then there is yellow direction line, another support. Almost impossible to think about shorting USA total view. One after another, there are supports. These supports hold very well. They may break, but difficult for them to break in one go. And it has already come down somewhat. We have no distribution count whatsoever. Difficult to short now. I shorted using reversal technique at the top. Now it is difficult for me to short. So I'm thinking ahead. I'm looking to buy now. That was the total view. Let me close the total view. Oh, sorry. Before closing, I would like to point to another how high is too high alert. I intended to do that. New high, new low percentage. These lines show up for a reason. You see, usually it is a line plot, new high, new low percentage. The vertical bars come up to tell us that it is becoming too high. Too high for what? Too high to protect profit in long positions, as I did tighten stop. And too high for what? Too high to look for shorting. Shorted what? I shorted some mega caps, I shorted QQQ, I shorted IWM. That is another thing that you can read from total view to know when it is becoming too high. And in weekly interval, I am not going to change that. If you change the daily to weekly, the advanced decline up down volume divergence also shows how high is too high, but that divergence was not here in recent weeks. So no point showing that now, it was not there. Instead, I would like to show the Nasdaq composite and NYSE composite breadth charts. How high is too high? When 3-month new high low hits the upper threshold. How high is too high when NICE does the same. It happened for both of them. I was looking for a pullback. The pullback happened. And looking means I told about it publicly. And in the major indexes too. And notice here Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500, S&P, all of them hit 3-month new high low. I was turning bearish with reversal setups. I traded QQQ, and now you can understand why I could have confidence to trade IWM also on Wednesday without waiting for the pullback that happened Thursday, Friday, because I was looking at not only IWM technical charts, many other things. Here is another thing that I looked at. How to know how high is too high and profit from that. Live examples. In any case, the total view entry chart is not allowing me to short. The same thing that I discovered from the market ETFs. What about Q edge? We'll find something very interesting. I was not expecting it. When I looked at Q edge, I ran the analytics and real-time analytics. I was thinking 5-day would turn bearish. It did not. This exactly shows what Q market breadth showed. It had a pullback but no distribution count, very orderly pullback, some profit booking probably. Even 5-day sector industry stock breadth did not turn bearish. No reason to be bearish because it has already pulled back near support across the board. Instead, I'm starting to buy. And all these things led me to stop buying on Wednesday. When jump thrust high hit on IWM even, jump thrust high hit on total view, I publicly shared in a tweet that I am stopping to buy. And Friday I shared a buy candidate again. So from Wednesday to Friday, my views changed because of these analytics. I bought at least one stock on one stock I shared publicly, but I bought few other stocks also. So Q edge, sector industry stock breadth does not allow us to short. If anything, allows us to buy, especially if Monday in real time this leftmost column turns green. What about bucket analysis? And this is something interesting. How high is too high? I explained that for bucket analysis, and I'd like to share one tweet. This is a tweet I shared as of 16th July's close. So 17th July, just at market open. Just at market just opened. I took some time to cut and paste. So this is as of 16th July's close. How high is too high? When the bucket analysis percentage of stocks in the uppermost bucket hit 30 to 40%, and here it hit 60%. How high was too high? That was too high. That was 16th July close. Which day was 16th July? Tuesday. Wednesday, IWM still went up, but 16th July itself we had flashed this warning sign, and the second warning also. When the percentage of stocks in the uppermost bucket jumps by more than 10% in one day. It jumped from about 8% to 60%. Jumped by a huge percent in one day and went to a very huge percentage that day. Both were telling that it is unsustainable. What is unsustainable? The up move. Did it mean it will turn into downtrend? No, it just meant that it was going to pull back. Works like a clockwork. Same like 3-month new high low, and I could take some reversal trades at that time, and I tightened stop in my long positions. Worked like a clockwork. How high was too high using bucket analysis. But now there is no overbought condition, there is no oversold condition also. It is predominantly bullish. 77% stocks are still above mid Bollinger Band. It is bullish. It had a pullback. We have support across the board. There was no distribution count. I would rather look to buy now. Lastly, and Q Finder gives a lot of how high is too high signals, isn't it? And I'd like to point to another tweet, and this time using Q Finder. This I shared on 17th July. How high was too high? When headwind flashes alert, red color is bearish. How high is too high? When red candle high flashes alert, red color is bearish. And how high is too high? When jump thrust green hits alert, means too many stocks are jumping up too much too fast. I mentioned Q Finder has 4 ways of indicating how high is too high. These are 3. The fourth one is here, that didn't flash, but 3 of the 4 ways flashed alert that this high was too high. We could look for some shorts. I took some shorts, profited from that. Reversal trades, not necessarily trend following trades. What about now? Now Q Finder is one. Now the weekly interval headwind is actually flashing bearish alert. That means some stocks that were at a very high price, because headwind and that too in weekly interval, meaning those stocks are at a very high price level. They are at risk of further pullback. That's what this shows. Bearish headwind in weekly means very high price level. They came down and they are at risk of coming down further. But other things that we saw so far that are pointing to not these stocks at very high price level, but maybe at lower price level, they are probably going to go up because of those supports, but not the stocks at very high price level that are starting to come down. That's how I read this when I combine with the other analytics. And daily interval is still bearish, so it is not allowing me to buy too many, but I did buy some stocks on Friday because of the supports I see across many angles. But before coming to that stock I shared, let's go back to today's theme. How high is too high, how low is too low, and how to profit. Price extreme is one way to understand that, especially for longer term investment. And let me go back to some of the stocks I shared earlier and see how I applied the concepts. ACAD, I shared it earlier in market recap somewhere here when it was at price extreme low. I mentioned that time this was earnings drop, then it stabilized, had bullish headwind, so I started buying at this time. When it went up, I booked partial profit. In fact, I re-entered the trade again here, so I have a full position now. It went up, I tightened stop. The stop did not hit, so I'm continuing to hold the stock position. Earlier, in fact, here I had covered call. I booked profit in that. I might have had some stock long position also. I actually booked profit here, but when I saw the flow long setup, that was the first possible 10 following long setup after this huge drop. So I took that again and I am having a nice profit. In fact, from here to here would be more than 20%, but I booked profit here already, and this new trade I reopened on ACAD, I have more than 15% profit. At this point it came down a little bit, but I put the stop using protection level, it has not hit. I'm holding the trade. But I came here to show how I use the price extreme low, that is a lucrative buy point in a fundamentally strong stock. It has to be fundamentally strong stock using Q Vital, can be an entry point for swing trade and also for possible longer term investment. I'll see if it goes up, I'll continue to hold it. There is no reason for me to come out of the trade. How low was too low? Price extreme low was too low in this case. How low is too low is also jump thrust low, which came in BHC, Bosch and company, Bosch Health companies. How low is too low? Jump thrust low. And often jump thrust low comes with price extreme low. Then came bullish headwind. I shared it publicly around this time. How low was too low? Jump thrust low. How low was too low? Price extreme. I used both of them, bought it here, and I mentioned publicly at that time. I upfront made it a covered call, sold out of the money 7 call. Then I told I will like to sell my call position and maybe some of the stocks, hold remaining stocks. But I also mentioned in subsequent market recaps that it pierced through 7 strike. I did not sell anything. I am holding the full covered call position with a nice profit and with a nice positive delta, because it was out of the money 7 strike that I sold. And if you look at weekly, this is what is called a tight bullish move. Tight, not at all loose move. There is absolutely no reason for me to come out of this trade also. That's what I mentioned. My long positions did overall quite well, and that also tells that I chose the stocks using how low is too low in both of these cases very accurately, not only based on technicals but based on their fundamentals and sometimes industry score. How low was too low, I applied that concept very accurately, and timing matters in increasing profit. We all can make profit, some profit probably, but timing helps me increasing profit more, and of course more importantly, or equally importantly at least, reduces risk. Now I'm going to show an example where every day's delay after signal day makes it a risky trade. And before that, okay, let me come to two stocks I shared last week. HWM was one. I want to explain how I managed the trade. It gave a flow short setup on this day, and I explained in a subsequent tweet that next day on Monday I used the intraday chart to take a trade, and I also booked partial profit, and probably I should go back to, I'll not spend time. I tweeted about it. You might look at the tweet. I booked partial position profit on Monday and held the remaining position as a swing trade with the swing trade stop using Q protection signal. That stop didn't hit. In fact, when it closed at the high of the day on Tuesday, and this is what I'm going to say, I think one may need a bit more practice with Q systems and having a holistic view on the stock in terms of fundamentals, technicals, industry. I actually added some more short position next day. But again, for a beginning Q trader, unless you are very comfortable applying all the dimensions, you might not do that. But see, my added position had very little loss. The stop loss was at the same protection level. Another factor that helped me, gave me some confidence, because I already booked some profit. And in the tweet I mentioned that I actually had a quite large intraday position because I was day trading, precision entering a swing trade, and my stop would be very narrow. On 5-minute interval, I took a bigger size position. I already booked some profit. So that was one reason, and the fact that my stop on the additional position I took would be very narrow. I could have that additional position. So I made my position 2x. If x is my usual size, I already booked some. And when it came down, I had about 3.5 4 to 3.5% profit on the total position. But I saw though market was coming down Wednesday, Thursday, Friday. Here Wednesday it came down, but Thursday, Friday HWM was not coming down. I was not comfortable with that, and I had 3.x% profit. It was at yellow direction line support. There was a watermark support. I would be happy if they broke, but they didn't. I had 3.x% profit in the on the remaining position on that full position now. I closed the entire trade. Another reason I closed is all that I mentioned already. I was looking at the market. Wednesday I stopped buying altogether, but Friday I started buying again. Meaning I am anticipating a bullish move. Why would I hold a short position that was not acting well? And that part is very important in trading profitably. I mentioned repeatedly in the Orange County session also that we need a decent trading system. I think Q is a decent trading system. We need any platform. Doesn't really matter in my view whether it is Registration or Metastock or any other platform. We need a decent trading system and a platform, but most of all we need after a decent trading system, risk management and choosing one from multiple candidates, because we have too many trades to take. We couldn't possibly take all of them. None of us could take for swing trading. So we focus on that more, risk management more and trade management more. That is what I did here. I booked profit, 3.x% profit on the position overnight held position, and on the entry day I mentioned I already booked some profit. Now the other trade is a nice example, APLE. See, in the last market recap I shared only two ideas. One short HWM, I could book it, close it with a profit, and APLE was the only trade I shared that was a long position, and that was a breakout long position that we can see from the historic trend line template. This was a breakout setup on last Friday, and I came to this example to illustrate the fact that after signal day, every day we delay, the stock becomes too high to buy. So if I followed my signal day, my buy level will be here. If I bought near market open the day after signal day, entry price would be here. Because it was a breakout setup, as is quite often true, the swing low would be too far to apply stop loss. So I would put stop loss using protection signal. If I took the breakout trade, Q protection signal would be somewhere here. You could check that out, somewhere here. So my risk distance would be here or here, depending on whether I took it on signal day, always preferred. And for all of you probably much easier to do because you are in the USA time zone. I'm in the opposite time zone, but I do watch prime movies sometimes when I'm looking to take my new position, so I don't mind staying awake if I want to. In either case, this would be my risk, and notice if I took it following guidelines at the high of the move, I already closed the trade with a profit. That is the Q swing trading philosophy. And one of the recent, I think the last market recap, the theme was when to hold and when to fold. And I explained very clearly, unambiguously, that in swing trading, after 1:1 reward risk ratio is hit, mathematically it works very well to book profit. Whether full profit or partial, I also mentioned holding partial position after that may give psychological fulfillment more than incremental profit, and it needs much more work to do. So in either case you would close the profit, at least partial, and guarantee that the trade as a whole is profitable if you entered on signal day. Why I came here? If I delayed by one day, my buy price will be here, stop would be at the same level. So at the high of the price move, The target was not hit. Yes, it has not hit the stop also, and maybe it will go up, but the risk increases every day, it goes up, and now it is at the risk of hitting stop loss if it comes down. On the other hand, if I traded on the signal day, I already booked profit, and that is one important thing I want to illustrate with a live example. We don't realize probably all the time, but timing is very important. And if you notice, queue flow setup or all the other setups tend to allow us to buy with extreme high level of accuracy, as high accuracy as any other system, and usually the signal allows us to buy on the same day as other system, or often in case of flow setup, and certainly in case of bounce setup, certainly in case of headwind setup, several days ahead of others. And that means we are able to book profit quickly and make it a risk-free trade. Every day delay after signal day makes it a risky trade and potentially a loss-making trade. And lastly, I recognize I am well beyond 1 hour point, but you see, I am spending a lot of time explaining concepts nowadays. I'm just not making a market recap, with the hope that, like I learned from many people, some people will also pick up some things and apply in their trading. So I hope it is of value to at least few people. With that hope, let me come to one trade that I tweeted about, Starbucks. And I would like to show Starbucks fundamentals. How low is too low? The same concept I applied here. How low is too low? How high is too high? I'm sharing many examples of both sides in this market recap, and I'm showing how I made a profit in all of them, and all the ideas I shared so far. You see, all these stocks I shared publicly before knowing the results. Starbucks I just shared on Friday, but I'm going to show the similar concepts. Jump thrust low. How low is too low? When a stock hits jump thrust low. How low is too low even for longer term investment? When it hits price extreme low. It even gave big move up 3. That move was enough to make a profitable swing trading, and as is not uncommon, it retested the same watermark, created a beautiful false downside breakout. On Friday it gave a big move up 3 again, and I tweeted about it on Friday during market hours. After that it went up further, but I'd like to mention I actually entered it on Thursday. Now why Thursday? Again, we all need a decent trading system. We need any platform. But then comes trade management, trade planning, getting ready. I was already ready with Starbucks. I go to Starbucks when I can. It had a beautiful double bottom in weekly. It already created a beautiful double bottom in daily. It already had jump thrust high, price extreme high, big move up 3. More often than not, in a strong fundamental stock, more often than not, almost always, I may say, I hesitate to say always, you know what I mean. A strong fundamental stock always goes up after that, almost always, I should say. As expected, often it makes a retest. I noticed that Wednesday, Thursday, Friday, the market was coming down, but Wednesday, Thursday, these 2 days, Starbucks didn't come down much. It had indecisive candles, could not go much into the body of Tuesday's up move. Remember this pattern. I already was aware of that pattern. I am looking for it to go up. I could wait for the trend line resistance to be broken. And again, you see, in case of Netflix, in case of QQQ, I shorted at the very top using how high was too high, and I did not wait for the trend line breakdown in both of those cases. And in this case, in a stock that I was willing to hold long term if need be, or I could get stopped out, I did not short put, I did not use covered call. I bought the stock here and I just got lucky in this case that Friday itself it moved up, but I was not expecting it to go down much in any case because of this very reliable pattern. And before buying on Friday, remember, the more I use, more you use all the Q angles, you have more confidence. I have more confidence, and I'd like to get the fundamentals of Starbucks using Q Vital. How low is too low? A stock that is at a low price level, and yes, it's, I think the undervaluation score was not too good. It was not blue. It was not really under medium valuation. Earnings growth was also not good. It has good earnings quality. Earnings is coming soon. It was acting well, and remember I told that I would like to buy a stock at a lower price. I prefer undervalued. I know I said that, and that is true. I prefer undervalued, but in this case, using insider buying in a well-known stock before earnings at price extreme low, jump thrust low, already big move up 3 came, fund accumulation valuation are neutral. I took a long position, and those are the reasons I took a long position on Thursday itself. And let's check out the industry score. See, I am looking at everything that gives me that confidence to buy little bit ahead of others, and that little bit ahead of others adds to not little bit of extra profit, it actually adds to a lot of extra profit. How I traded Starbucks, I bought it on Thursday, and I will announce one more. I don't know if I can call it improvement. I probably should call it improvement from my earlier trading years. When I first started trading, I made loss, of course, but when I was making consistent profit, I left job at 46 years of age. I was of the view that we use equal size position in all trades, and I matured more and more over the years now, and I think it may be applied only for more mature traders. What I mean by mature traders, who are making consistent profit for several years. Now I am comfortable changing the size of positions from time to time. And Starbucks is one, not APLE, not that stock, but Starbucks is one stock where I traded 5x positions. And I'll explain why I traded that. I'll come to that. Why 5x? It's quite a lot higher than usual 1x size. Why, I'll come to that. But I traded 5x, and on Friday it went up significantly, 6.4%. But I did not buy at the close on Thursday. I'm very explaining everything. I actually bought somewhere on the higher side. So my profit was not more than 6.4%. It was actually more than 5%. I had 5x position, I closed 4x position. What I did by that, I guaranteed it to be now a 1x size, usual size, and it cannot make loss. I have already made 5% profit on 4x position. On 1x position in this stock, I am not going to make a loss. Very difficult unless hugely gaps down. I don't think it will happen. Now, why did I trade 5x unusually large size? That answer comes from, again, you see, the trading strategy, tactics, management plays a big role in trading profitably, not platform certainly, and trading systems. Okay, we need a good BHC. I remember I shared it many times, and it's worth coming back to that. And I'd also like to come back to ACAD. I know I'm taking time, but I'm quite sure it is worth to some people at least. See, BHC, I bought at this price level. I sold far out of the money, 7 strike. Still, if you remember my market recap when I bought it, I publicly announced I got and I sold 8 month far away expiry, far out of the money 7 strike, I got in 8 months 12% premium, and even if it hit 7 strike, it would be only 50 delta. I would still have, and I do still have, high positive delta in the trade. And 12% in 8 months means 18% annually. I was not thinking it is going to crash. I was thinking in 8 months, even if it goes down, it is going to go up. And I had a cushion of 18% annualized return. I don't know, I think it doesn't pay much of a dividend, so I got premium. Now, Starbucks, why did I trade? I'll come to that, but I would like to explain a bit more of the ACAD, actual trade that I did. I mentioned I was tracking it since earnings. That is because on this day, one gentleman told it's a good stock to buy, and he's a very close person to me. In fact, Q would not probably allow me to buy, but I took an exploratory position. And I'm explaining I'll come back to Starbucks, and because these two examples are very related to my thinking of how I wanted to manage Starbucks if it did not go up, if it fell down. And ACAD will help that. BHC also will help in that understanding. See, I took a small exploratory position actually on ACAD before earnings, and if it went up, I could buy more with a low risk entry point, but it fell. And this drop at the lowest point would be more than, I think, 15%, but I had a small position, no problem, and I am used to take loss, no issue with that. But I observed that it was not falling down. Now, two things I did. First, when it dropped, I sold, if I remember correctly, 3 month out of the money call that would make my trade profitable if it went back to my original entry price. So my naked stock position I changed to covered call here, and if the stock did not go bankrupt, if it went up sometime in 3 months, I would make a profit. If it did not go up in 3 months, if it continued to go down, I hope not too much, not to zero, I was thinking of selling further out of further expiry options to try to cover this. Anyway, it's a small position, but I did not have to do that. It stabilized, and it is important how I am managing the trade at this point. It stabilized, had a bullish headwind, had a false downside breakout. I bought the stock more. I did not cover it, and when it went back to this price level, actually here I mentioned my covered call already made a profit or very close to profit, I don't remember, and with the stock position it made a significant profit. It came to the yellow direction line, I booked my profit. And then it gave a flow long trade. I bought the stock, and that is the position I am holding with 15%. It was at the top, now a little bit less profit with a stop loss. Now, why did I come to these two examples? These two examples, real life examples, recent trades, I had in mind that Starbucks, which had the jump thrust low, price extreme low, big move up 3, insider are buying, I was not expecting it to crash to zero from around 75. I was not expecting that. So I bought it here with the thought that for every 100 shares, if it broke below the watermark support, I would sell far out of the money call, just like the way I did in ACAT. In BHC, I did not have to do that because I started with covered call upfront, but here, starting with covered call is not bad. It gives about 18-20% annualized return, but if I can, I would like to let the stock move. By the way, for BHC, I mentioned I have covered call, but I some uncovered stock position also. So I'm having positive delta. I'll continue to have positive delta. But in any case, I sometimes like to start with a stock long position, and only if I have to, I make it covered call, and yes, it drops somewhat. That means I have to sell further out of expiry call, but I am comfortable doing that because I have seen it working out well for me over and over. Why did it work out for me? Because I am buying stocks at low. Which low? At low, that is too low. How low is too low? I am knowing that this strategy I am applying there, and also I am looking at fundamentally strong stock, hopefully with some insider buying. In this case, not funds accumulation is there, but insiders buying, earnings is coming, earnings positive, industry is also turning around. So I am looking at all that, and that is why I made a long explanation that why I was confident not only buying on Thursday, but also why I was confident in making it a 5x position. And I had the thought in mind that if I have about 5% profit, I will close 4x position, hold the stock, hopefully try to make it a position trade, and if it went down, I would just make it a covered call with enough. I mentioned earlier, I have some money in fixed deposit. I think that okay, fixed deposit gives 5% yearly yield. I'll get much more that anyway from start. That is my thinking. But you have to know what is your situation, what you feel comfortable. And I will say one thing, if you are able to read how high is too high, how low is too low, you will be able to make more profit, and you will be able to sometimes get very lucrative buy setups, be it BHC, actually not sometimes, many times, whether it is BHC or ACAD or Starbucks, my current example, you will find plenty of lucrative buying opportunities well ahead of others, and sometimes you can short like I did. But certainly on the buy side, if you are not comfortable shorting, if you carry out the 360 degrees analysis using Q like that, you will most likely find other buying opportunities today. I did buy some other stocks, but I am not going to show them. Shorting I would not like to do in today's session. I leave the finding trades to you, further trades in your good hands. Thanks a lot for joining. If you are watching this video till the end, you are very amazing people. Thanks for that. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live examples always show, there is no reason not to do that. Trade profitably. Thank you.